Hey, it's Soleil, and this is episode 15 of the Red Pilled Orange Pill Investor. And today I'm going to talk about diversification and why I don't really do it. I invest in two assets, Bitcoin and Tesla, and then within the Bitcoin umbrella, that is mining stocks. And eventually, if the ETFs get options, I'll take a look at those as well. But the CEO of MicroStrategy, Michael Saylor, he said you want to invest in an asset when it's the clear winner and when it's disrupting the industry. And so where I see Tesla going is dominating EV sales. The folks that I follow that cover Tesla, like solving the money problem, they pretty much think that BYD will be a challenger, and then there will be a handful of other Chinese car companies that are still in play, kind of fighting over the scraps. So, but in addition to that, I see Tesla making billions of humanoid robots, dominating the AI space. They're going to have licensed full self-driving to all of the other car companies that don't go bankrupt. They're already leasing their chargers. They'll get solar power going. Like the next time I buy a house, if I have a house built or whatever, it's going to have a Tesla roof on it. That's just automatic. They will probably solve with a general intelligence. They'll probably borrow all of the language data they have from Twitter. They're collecting more data for full self-driving than anybody else, and doesn't seem like there's any way that any of the other car companies could get enough cameras on roads to collect as much data as Tesla has, and the more data it collects, the wider their lead becomes. It's almost kind of like if anybody remembers when Jerry Rice played football. As soon as he started setting records in a category, he broke his own record every time he played a game. And that lasted for I don't know how many years. But I think, I could be wrong, but maybe Tony Gonzalez broke something for catches, or I don't know. He's probably got people that can threaten his record now. But when he was playing, he was like the Tesla of football, because every time he caught a pass, he just broke his own record, and he just made it that much harder for anybody else to catch up. And and he just kept putting off retirement. He would just play until he just couldn't play anymore. So that's where I see Tesla headed. They can probably, partner with SpaceX to get breakthroughs on materials. And there was a time, I guess, when Tesla had a chance of going bankrupt, and that has long since passed. Some people don't even think, I'm sure if Elon left the company, it would take a short-term hit, but it's likely that he's ingrained such a philosophy of winning and dominating and efficiency that they would probably be able to continue for at least a decade or so. So that wouldn't even make me necessarily just like panic sell if Elon was to leave the company. So they're going to dominate the electric vehicle space, the AI space, humanoid robot space, the solar space. I think I'm missing something, but no big deal if I did miss something. That's enough. So they're a company that I believe is disrupting their industries. Gas car companies are shit out of luck, and they're the clear winner. So disrupting, and they're the clear winner. As far as Bitcoin is concerned, they've been on top, and I have not even gone to coin market cap for quite a while. Let me see, coin market cap. But I used to trade anything and everything. And Bitcoin, of course, still at the top. Ethereum's been number 2 for probably 5 years, 10 years, I don't know. Tether at number 3. I don't remember if that's where Tether was before. Okay, Binance, Solana, Ripple, Cardano. I've traded half of these. So Bitcoin's number 1. There's no second place. The flippening isn't going to happen. Ethereum, if it ever had a chance of flipping, it was when it was proof of work. As a proof of stake, I'd rather fucking flip hamburgers than think that Ethereum was flipping jack shit. So all of these other ones, they shuffle around, and you could probably make some short-term money, especially with this bull market. Maybe you could get the next big thing. I don't know what the hell the next big thing is. I recognize half of these that I used to trade, and the other half I never heard of before. Polkadot, I don't know what the hell that is. But yeah, some of these could pump while Bitcoin is pumping, but it just doesn't. The risk of getting a rug pull, or Ethereum has been hacked. As far as I know, Bitcoin has never been hacked. There can be scammers associated with anything, but as long as you protect yourself, as far as I know, nobody's ever hacked somebody's private keys in Bitcoin. So they are clearly the winner, and they will continue to win. I would say forever, except I guess at some point the universe will die in cold and darkness when all the suns burn out. But Bitcoin's gold for the next 6,000 years. So in my lifetime, I don't think I'll have to worry about it. And they're disrupting. So as Bitcoin pumps and becomes even more and more pricey, it's going to look even more appetizing. So it's going to start just absorbing people that want to invest in the bond market, in real estate, in fine art, anything that a rich person would normally say, oh, let me stash the money into this. It's just going to all pour into Bitcoin. That's not my idea. That's just me listening to hundreds of hours of Michael Saylor talk. And so yeah, I've heard the statistic that every time you add a new asset up to like 25-ish, then you're considered diversified and you're protecting yourself from catastrophic, wipeout if a company goes out of business or whatnot. But the other thing that Michael Saylor says is diversification is selling the winners to buy the losers. And so these are the two winners that I've picked. So sometimes if Bitcoin's up and Tesla's down, am I selling a winner to buy a loser? I don't think that's necessarily the case, because I'm kind of using them as a trading pair. As far as I can tell, in what I believe is I've picked two winners. And one may win more than the other. I tend to think that Bitcoin is the most dominant. And I also believe in it philosophically. I guess I'd be a maximalist at this point. Definitely not a purist, or I wouldn't be in the stock market trading Tesla and Bitcoin mining stocks. But definitely a maximalist. I think Bitcoin's going to solve half of the world's problems. Once the entire world is operating on a sound, uncorruptible money, and everybody has to play fair and by the rules, and people will be rewarded for competence and effort instead of cronyism, and corruption, then the world will be a better place on a local level, because it won't be advantageous to steal your neighbor's shit when it's cryptographically protected, and it won't be advantageous to invade your neighbor and try to take their gold, because if all of their wealth is stored in Bitcoin, then you're kind of assed out and all you did was just waste your resources. So Bitcoin solved half the world's problems, and then I guess it'll be up to us to solve the rest. And so that's where I see Tesla headed, dominating its industry and Bitcoin dominating the financial space for at least as long as I'll be alive, unless we come up with some really good shit. So yeah, that's why I don't diversify. And if you don't have something that you are confident in, then I suppose the SPY or the WOO, or I'm sorry, the VOO or whatever, those will be fine. I used to trade IWM, and I'm actually interested to see their options chain, because I had a bombshell dropped on me the other day when I took a look at SPY for the first time in a couple of years. And they had, yep, Russell, no, okay. Looked like a confused dog for a second there. Okay, Russell looks like still just 3 days a week. So today was a holiday, so that's why this is not the 15th and then the 17th, 19th. Okay, so Monday, Wednesday, Friday, Monday, Wednesday, Friday. Okay. So I actually liked trading selling covered calls on the Russell over SPY. I think the premium that you could get was a little higher. So let me just see. So you can get, let's see, 1% would be 19. So that's about 2.5%. It's actually not bad. That's on a put. On a put. Okay. Selling a covered call at 190. You know what? The prices must have changed after hours, because this can't be accurate. I need to check this during hours to get a fair, to check and see the fair premiums here. But I'm actually kind of intrigued to see trading SPY Monday, Wednesday, Friday was already kind of a hassle. But I would be very interested to see what would happen if I tried to sell SPY daily. Just open it right before the close. Close and open contracts. I guess it doesn't really matter if you do it when they open or when they close. But let's see. So 1% of this would be $4. This is like a third of a percent. But a third of a percent you could do 5 times a week. So that's 5/3 a week. That's 1.666. So let's see, 1.01666 raised the no, that can't be 1%. Oh, that's a week. Okay, no, I'm screwing that up. So it's really, that's about a third of a percent. Okay, so it's 1.003. 5 times a week times 52 weeks with 260 trading days. There's probably some holidays in there, so let's do 255. 255 trading days a year? I don't know. That can't be right. Let's see. 1.003. Yeah, that's a 30%. 250 trading days. Okay, I don't know what I clicked poorly. Oh no, I did Oh, I raced 1.01 to the 1.03 to the 255. So I screwed something way the hell up. Yeah, so it looks like if you traded this and just got, at the money, just traded at the money, you could get, double. It would take trading 3 days in a row to generate enough premium to buy an extra share of SPY. So what would happen if we went up at least $1 to give a little bit of call away value? So that would be, see, 1% of this would be 4. This is about 90 cents. Actually, let's go to the 478 because we can get $50 here. And that's 5 times 9 is 45. So 1% would be about 50 cents. I'm sorry, $4.50. And this would be 1/9 of that. Oh God. So 1% divided by 9. 0.11111. All right, so 1.00111 to the 250. Okay, 30%. 30% is double what the SPY usually delivers. So I don't love it, but let me go back and do the. But that's actually giving some call away value too. So that's, you could get extra like 1/3% in call away value that you're allowing for as well. So it's, unless you really think the SPY is going to trade sideways for an entire year. All right, let's trade IWM again. So this is only 1 day of premium. Now, I think this is the one that I said was what did it do after hours? It didn't drop much after hours. Anyway, I have to look at it when the market's open to see if Russell's worth a damn. But I used to trade it on Monday, Wednesday, Friday, and it worked out all right. So anyway, if you don't know what to trade, then these ETFs diversify for you and basically kind of save you from yourself, save you from making any stupid decisions because you're going to get a bunch of top companies, et cetera, et cetera. So you can do that, but I don't do it. Not financial advice. It's just for fun. And yeah, so those are the 2 assets I trade, and that's why I trade them. All right, be good, y'all.